So friends, as you know, towards financial planning, we have this factor which you need to consider as the required rate of return. So I thought of making another separate video to discuss a little bit depth of how you can arrive to the required rate of return, and based on your goals, how you can choose the various type of instruments to meet your financial goals. So please share it to your friends, relatives, colleagues, so they can also get an understanding of how they can select their financial instrument to meet the financial goals, and also how to calculate the expected rate of return. So all this you're going to see in this particular video, and I'm Navito here. I come with investment background. Since 2010, I've been doing investment for myself, picking up stocks based on in-depth research analysis, various models I've used, and also I have done financial planning as well for myself in a simplistic way, and I'm also learning to sharpen my axe on financial planning. I'm going to help you out as well. When it comes to expected rate of return, you first need to understand the financial goals. You need to give a value for each of these goals. For example, if you want a house 7 years down the line, you mentioned the time frame 7 years, and down the line you need it after 7 years, and what is the current cost of the house, that is also you need to mention. So if it is 7 years and beyond, it is like a long-term instrument which you need to pick towards budgeting of your house. And when it comes to a car, you might want a car after 2 or 3 years, so you need to go for a short-term investment. This is a short-term goal. Or if it is a retirement plan, if you're already 58, then it is like a short-term goal for you. But if you're 40, 45, that becomes a long-term objective for you. So once you have identified the period, whether it's a short-term or medium-term or long-term, once you have classified them, then you can derive the future value of this particular goals depending on the inflation. And once you have inflated this value in the future, then you can identify the rate of return. Now, how to calculate the rate of return? Rate of return, if you go back to your school days, you use the compound interest formula, wherein you say, to know the future value of my money, I multiply the today's value of my money with 1 plus the expected rate of return, closing the bracket, and raise it to the power of the number of years. So that is going to give me the future expected return. But now if I want to know the interest rate depending on my future rate of return and the current capital which I want to invest and the total number of years, then I say interest rate is equal to the future value of my return divided by the present value, close the bracket entirely, raise it to the power of 1 divided by number of years, and then subtract it totally with 1. That will give you the rate of return which you are expecting. This is a formula to calculate the rate of return based on the compound interest formula. So I hope you have understood how to calculate the expected rate of return, and also how to determine if it is short term, long term, and what are the assets you need to select if it is a short term or a long term. If it is a long term, you go for a risky asset which could be like a stock or a mutual fund, and if it is a short term or a medium term, for both these it's a lot of combination which are available. Even in stocks, there are companies which are low risk stocks. You could even go for that, or it could even go for debt instruments or bonds or invoice discounting. There are so many n number of instruments which could suit you, but nevertheless it is better to do in-depth financial analysis. Take a help of a financial planner so that he can advise you, and having a second opinion, having a second eye on your financial plan is much better than having a single eye. You can get advice, opinion, suggestions which can help you achieve your goals faster and more better, with more percentage of probability to achieve it. So hope you have liked it. Please like it towards the end if you have liked it. See you. Bye.